Oil, that's right. So let's jump over first. I was going to take a peek. We get the EIA number at 10:30, right? This is kind of a little preview. So, oh, is this for the API? No, API, yeah, what did the API report
They had a
last night?
drawdown, I think, at 973,000 or something.
API, maybe it was
998.
998? Yeah. Okay, that was last night. And you had gas stockpiles rising. We'll see how this goes up. I'm just going to jump in to see if there's a top live before, they don't have it up there yet. Okay, that's all right. We'll pull it up. So, is it up there?
No, it's not.
Yeah,
no,
that's
interesting.
I know. I think it's been a little late. Usually they have it 10 minutes ahead of time. But here's the price of crude. So, man, quite an acceleration. I started taking a look at this during the last commercial break, and we're jumping 20 cents just even taking a look. And from 8:30 this morning, we just traded up a full $1. So some of the spreads, and I had gold up here as well. Quite a move in gold jumping around. But crude oil, looking at the March contract, the 11 a.m.s are the ones that line up, really the only ones that make sense for volatility.
Okay.
You have 54.25, going to be a point where you can have bullish exposure for $1.50 up. Same thing, 54.25, bearish exposure, $1.50 down. Again, the contract trading about 6 pennies away from that level. Now it's 5. So your bullish spread, going to be the one that you have about 5 pennies of intrinsic value, costing you 24. And then on the flip side, you're selling the bearish spread, all premium, 19. So you're looking at $43.
4.3 pennies, okay.
Yeah, 43 pennies.
43, oh, right? That's right. Yeah. It's not natural gas. Yeah, right.
From 54.25, and you know, the nice thing about this, though, is that you really don't need a directional bias when it's this close. Because you don't have a directional bias. You have equal.
Which is good.
Yeah, you know, and this, if you just want a straight volatility trade, you're so close where it can pop both ways. As opposed to, and just to jump around, you know, you have, just let's see, the noons. Yeah, you could use 54, or you could use 54.75. That's a great example where you'd have a 30 cents of intrinsic value on either side, right? You could do a bullish trade like that, or you can do a bearish trade, and your other one would just be a small premium trade, and the dailies line up a little weird as well. And I say weird only because we've moved so far in crude since where we were, you know, last night.
Even 9 o'clock, right?
Yeah, and I think what time does crude close at 2:30, I think, and that's where things get really, because here's 2:30 yesterday at 52.75.
Yeah.
So we're up, you know, big time since then. So we get those numbers at 10:30. We'll see where we come out.
Let me pull this up for a second. So,
natural gas has moved today again. Look at that. It's down 3.3%. Natural gas down 9 pennies.
2.59.
I know. We can jump to, but
wow,
crazy, right?
So this contract, you only got 291,000. That's light contract volume. You had one good move up. That's it.
I mean, are we really in an oil economy that we're going to see $60 oil again? I don't know.
I know.
Right? That would seem hard-pressed. Even Kevin Hicks was just talking about it, you know, in terms of the fundamentals of what we in the U.S. produce, along with the world market, and then with waning demand from the likes of Tesla and so forth.
Yeah. No,
but I never know, man.
I'd go for, you know, you get that one spike there, but now we got over it with tremendously lighter volume, so it's going to be wild.
So what were you saying? Did you have a directional there at the end, or no?
The directional will be down.
Downward. That's what I said. Yeah.
It would be.
And
not by much, though.
No, I'm sure. I was just curious.
Because of that one spike.
I mean, I feel like I overall, not even to do with anything today, number one, you've already moved so far, right?
Yeah.
And number two, it's just you're reaching levels where you're almost at 55. You're at 54.31. If you're at 55, do you think it's more likely you go to 50 or 60? I'd be like, I just think it's more likely overall you go to 50. So you keep that in mind. And I'm just jumping around. I wanted to see. So here's, I mean, we always talk about just going both ways, but this is where, you know, if you're just going directionally, you're able to sell it at 54.07. The premium you're paying is that you're selling it, you know, 23 or 24 cents below the market, but you're risking 18. And if you ever get around to 52.75, you know, that's quite a risk reward there that you're dealing with in terms of 6, 7 to 1. I like those trades sometimes when you're directionally.
No, totally.
Yeah,
totally.
But that's only until 11 as well. So just jump around. This is nice. When you get the noons, let's see the noons. Now this, again, this is where, let's see what, because it's always interesting. Sometimes you don't know paying much premium. So here's a noon. You're going to be getting in it if you're going short. I'm just playing the short, right? So this is how you already have value, and in this one you have 45 cents of value. You have the difference from 54.75 down to 54.30.
Yeah.
So you're selling it, and you're risking 51 for 100, right? You're risking 1 to make 2. It couldn't be a more perfect example.
Right.
And the only reason that they're giving you that kind of risk reward is that you're selling it $8 to $10 to $6 under market, which is the premium.
Right.
So
which isn't bad. Though.
No, and that's exactly why I pull it up, because you know, it's a really close to an at-market trade, yet this one goes till noon too,
Which is good.
and and you lock in a 1 to 2 risk reward. That's a great trade if you're bearish, I would say. You know, right?
Yes, exactly.
It's got to move in your direction no matter what, because if it expires where it's at, you're going to lose that 7 cents. Right? The market doesn't move, you lose 7 cents. That's the reason for it. But with the EIA coming...
I'd take that
Yeah,
trade.
I was just going to say, with the EIA coming in 4 minutes, you have 90 minutes of exposure. If anybody follows the market, they should say, geez, 6 or 7 cents is going to be like a rounding error probably in the reality of how that trade plays out on most days.
Wow.
We'll check back in. Perfect.
Pretty well.
Yeah.
Welcome back, folks. Quite a differential from the API last night.
That's right. There's your headline number. Crude oil inventories rising 3.63 million barrels. Looks like the Bloomberg user survey, a rise of 1.8. Nonetheless, we saw the market reacting, jumping back to the futures chart. Oh, and look at that quickly. Spiked below $54. We were trading at about $54.30 coming into that number. So you got a 30-cent spike initially. Makes sense. A lot more oil than they thought. It's going to be cheaper prices if we got that much of a build. And but this thing's going to oscillate for a little while, I imagine, as it tries to figure out. We were just up there at 54.41, spiked down to a low of 53.94, and look at that. We're almost back right up to that level.
Quite a differential, man.
Yeah.
I mean, the API had a drawdown of 990,000
barrels, something like that. Yeah.
And
yeah. And it looks like they were looking for a rise, but of course, there's going to be gas in here. I mean, let's a couple of these cool stories we were looking at, right, as we were getting ready for this. So Chinese oil buyers purchasing light sweet crude from the U.S. Gulf Coast is a cheaper alternative compared to buying North Sea oil. Louisiana light sweet trading $62.32. The landed cost for oil from Louisiana to China's Qingdao terminal is approximately $63.37 per barrel. On the other hand, China's landed cost for that Brent crude is $63.93. Another, this breaks down. Where did I have $56 a barrel cheaper compared?
Isn't that cool?
I mean, it would make sense, right?
So it costs. Could you just move that?
Yes, go ahead.
So it costs. It's saying there it costs $1.05 to move crude from Louisiana to China a barrel.
Sure, and
that's
you're going
pretty
from
cool,
62.32 to 60.37. Yeah, pretty cool.
That's pretty amazing, right?
Yes. So, and then they have China's landed cost $63.93 for Brent crude.
Right.
Which, and then the 56 compared, so that's compared to that 63.37, I see.
Oh, there it is. Cool. That's what I wanted to know. 2 million barrels of oil is in a VLCC carrier. Look at that. 2 million barrels.
Wow.
Isn't that cool?
Yeah.
A fully loaded carrying 2 million barrels of oil. This works out to approximately 1.2 million barrels per shipment.
No, $1.2 million. That's where I got lost.
Okay,
that's where I was stopped talking.
Right.
So value-wise, over $1 million in oil per tanker.
That's pretty cool, though. Okay, so now we know that the VLCCs carry 2 million barrels of oil.
It's a nice round number.
Yeah, it is. It's easy to remember, man.
And then at where we're trading at, you're looking at $1.2 million per shipment. Let's jump back and see how we're trading. So nothing too dramatic. We're coming back to that 54.30 price point, wherever we were pretty close to that level. But
the fight is on.
Yeah, the fight is on, and there's your full breakdown. So it looks like the median analyst estimate rises 2.4. The 1.8 was Bloomberg survey. They always are somewhat close. You have Cushing crude declining 1.1 million basically. Pad 3, I think that's what we're looking at, right? In one of those articles, up 1.6 million. Gasoline, not quite the build that they had thought. 400 versus 1.4 million. Distillate's pretty close. I just want to go over what we were looking at as well in terms of the weather of some of these places, right?
Yeah, this is pretty cool. Yeah.
Yeah.
So what they're saying, folks, is that in Houston, the channels, they were fogged in, so they couldn't get the big tankers in and out.
So it's cool. They put out like just kind of what to look for, what could play into the report coming out. So this starts at 10:22. We're going back before the report comes out, and they talk about fog and bad weather in the Gulf Coast led to reported loading delays at various shipment terminals, including those operating Corpus Christi, And so that would put a damper on exports.
Yeah.
It'd be a bigger build, right?
Right.
You can't get the oil or the oil refined products out, and then they tie back to it as well to follow up. You had the Houston ship channel. They closed several times last week. It could curb exports of refined products, LPG, and they just talk about the timing might not be ideal as the U.S. is still working through a massive glut of fuel that has depressed crack margins. Now, fast forwarding to the number we got, gasoline, right, rising, and that's probably playing into some of that they were talking about.
Because they can't make as much of it.
Yeah, and so
right.
Yeah, 54.15. So, you know, decent moves on a 5-minute basis in terms of 30 cents. Even, and this takes some time, as in that's why I think you and I, we go for those noon ones, because the first half hour isn't always enough for the market to digest kind of where it wants to go off that report, or just sometimes where it wants to go regardless of that report. So 54.14, and yeah, we'll see where we end up.